Hey guys, Dave Keller here with Market Misbehavior. I love to ask interviewees what their one chart would be. And that is, if you had one chart, just one chart, besides a regular chart of the S&P 500 as a way to understand the broad market environment, what would it be right now and why? So here is my one chart for today.
So today's chart is the Biotechnology ETF, ticker IBB. So biotechs are an interesting chart because if you look at the relative strength, there's this transition from accumulation to consolidation to arguably now distribution. And the question now is, how deep is a pullback and where can you start to expect support? So just to orient ourselves to the chart, biotech ETF actually topped out in December. So it's actually kind of rare. Most stocks topped out in January or February. The IBB actually hit its essentially its high in December of 2020. It pulled back in January, retested that same level in February, and then sold off into the March lows. Actually bottomed out about a week earlier than the market here on March 16th. If you look at the relative strength on the IBB, really accelerated to the upside after the February market peak, and then continued to outperform through the second week in May. So, as stocks sold off, biotechs did well on a relative basis. As stocks rallied, the biotech index sort of jumped ahead of things and outperformed on the way up. So it started to look pretty attractive because it was doing well. It was good offense and good defense, meaning it did well. It outperformed in an up market, also outperformed in a down market, which is kind of what you'd like to see from something you hold, ideally. What's interesting though is since then, right? If you start the clock in mid-May, you can see the relative strength stabilized. It sort of essentially went sideways. Even though the IBB went higher, it broke above those that December high here in April, continue to go higher, eventually hit a peak third week in July. But during that period, the relative strength was sideways. So this is where it transitioned, I think, from an accumulation phase to more of a consolidation phase. Even though the price was going higher on a relative basis, it was sort of just keeping pace with the overall market environment. If you think about it, a lot of stocks, obviously, including the S&P 500, it was all about whether or not it could eclipse its June high. Whereas here, it actually had broken to a high in May, and now it's trying to get above its May high. So the whole chart looks very different than the chart of the S&P 500, even though there's this general direction of selling off into March and rallying from there. The configuration is very different in terms of where the peaks are, how it performed relative to sort of the average group out there. So let's look at what's happening now. So this the ETF, the IBB, actually topped out here second to third week in July. Since then, it's pulled back, and a couple of warning signs that have come off, in my opinion. Warning sign number one: it started to break below the swing low here. So Charles Dow tells us an uptrend is a series of higher highs and higher lows, a downtrend a pattern of lower highs and lower lows. And if you look, these lows here from mid-July, right around the 135 level, really important. And you can see we finally broke below that on a closing basis here the last week of July, and then again this week are closing below those levels. This also pushed us below the 50-day moving average, and you can see during the uptrend in mid-June, it actually pulled back to an ascending 50-day moving average, which was sort of a buyable dip before the next leg higher. Here, it's actually broken down through support, and it's not held the 50-day moving average. Finally, the relative strength has broken to a new swing low. It's actually a new 4-month low. And so the relative strength, as I mentioned, was increasing through May, was sideways or consolidating May, June, mid-July, and now is rotating lower, and we've made a new swing low. So all of a sudden, the relative strength is telling us it's more in a distribution phase. And you just get that idea from the fact that it's breaking down through support while the S&P is testing, all-time highs at 3,400. So what's next for biotech? Based on the fact that it's broken down through support, I think it's fair to assume we go down to the next layer of support. And for me, there's this confluence zone right around $125. So this started as actually the peak from last December and the peak from February, right about at that same level. You can see we consolidated there in late April. Then after we broke to new highs here in April to May, we pulled back and tested just the upper end of this range in May and in June, and then continued on. So this is sort of a level of resistance and support that I think might ring true once again. This is also a 38.2% retracement of this March to July rally. So that would be a key Fibonacci support level. And also the 200-day moving average is right around 122.50, and pretty soon is going to be right in that range as well. So you have price support, Fibonacci support, and moving average support all in this pink shaded area, which is why I think it's fair to assume that that's a reasonable level for downside expectation for the IBB. What will be telling to see how the price actually gets from here to there would be, number one, the RSI level. In a bull market phase, when a stock or an ETF is in an uptrend, the RSI doesn't tend to get below an RSI of 40, and it's sitting right around that level right about now. So if it's able to hold 40 during this pullback, it tells you that it's still in a healthy bull market phase, and maybe this is the next support before the next move higher. If this starts breaking down through an RSI of 40, I think that would tell me, at least, it's more in a bearish phase, sort of like what we saw in the first quarter of 2020 when it was much lower lows in store. And then the last thing would be the relative strength. Obviously, healthcare is a group that's sort of been hot or cold, did very well, in certain names, very, very well through the first 6 months of the year. And now we're starting to see signs that the group is rotating lower. And I would say it's not just IBB, by the way. A lot of individual biotech stocks, things like AbbVie, Alexion, ALXN, Gilead, GILD, Insight, INCY. These are all stocks that are sort of in that rotating lower phase, breaking down through support. And also Regeneron, which has been one of the highest flying stocks in the group, also showing some potential weakness. So that is my one chart for today, the IBB, the Biotechnology group, and really focusing on some rotation away from biotechs and identifying a key downside objective right around $125. That's the one chart for today. Hope you have a great day from all of us at Market Misbehavior. Be safe. Take care.